Here are Star Mountain Capital's findings on how the lower middle market can be a good complement to a public pensions portfolio. First, why lower middle market private credit? There are competitive risk-adjusted returns. Think watch the herd, but do not follow the herd. And the lower middle market has lower correlation in comparison to other asset classes. Second, manager qualities. Fundamentals including economic alignment, transparency, and consistency. And third, the lower middle market dynamics. The lower middle market makes up nearly 50% of the US GDP. That's 200,000 plus private companies with local real economy job creation.
Hi, I'm Brett Hickey, founder and CEO of Star Mountain Capital. It's a privilege today to be here with Tom Tull, who is a luminary in the investment world, having approximately 4 decades of investment experience, including formerly the chief investment officer of the Texas Employee Retirement System. Tom, thank you for being with us today.
It's a sincere pleasure, and it's scary when I hear 4 decades like that.
It doesn't look it.
No, thanks.
So we're sitting in an environment where the S&P, NASDAQ, aside from a little bit of turbulence over the last 24 hours, have continued to blow through all-time highs. As we think about the geopolitical risks, and being a former veteran yourself, you're of course well aware of that, the geopolitical risks that exist, the macroeconomic risks and uncertainties, how do you think about the U.S. lower middle market from a potential value proposition, whether it's around correlation or other aspects? And then maybe after we'll dive in a little bit into perhaps some of the economic benefits to the U.S. from your vantage point.
Okay. Yeah, I just to take a step back in terms of our overview at ERS, my past life, we were always looking for competitive risk-adjusted rates of return at a reasonable cost. So we want to be not with the herd. We want to be, watching the herd and taking advantage of opportunities within the marketplace accordingly. So I think the world has changed dramatically over the last 4 decades. And unfortunately, I was investing in the 70s. We had different mandates and different objectives and considerations then. And those have continued to evolve into a more politicized environment. And that's when I look at Star Mountain and I look at the lower middle market, and definitions vary depending on who you talk to. I'm using more along the 10 to 30 million EBITDA kind of framework, but it's unique. It's not a crowded trade. And I like that. It has a low correlation to other assets, and it has a very nice fit within an overall trust. And in this current environment, it is even to the point where there's so much politicizing and so much noise in the marketplace, not to mention equity markets are at a new high. Everybody loves Bitcoin. You name it.
I saw it surging in inflows this morning.
Yeah. At ERS, we were more concerned with the fundamentals, transparency, consistency, and the fact that we could rely on a relationship. And I stress that, a relationship rather than just providing capital to an allocator.
That's helpful. And, I know in starting Star Mountain, this is actually my 21st year of running the lower middle market private investment firm, which not quite year 4 decades, wow. But it does surprise me to say that. I don't know whether my kids make me feel young or old. I guess probably depends on the day. But in all seriousness, as we look at the economy today and how much has shifted, we're all aware of deposits retracting from a lot of the regional banks. Let's talk a little bit about the importance to the local economy, importance to job creation in America. I know right now we're sitting in a tight labor market, but we have a very aging demographic. And where does innovation come from? Where are jobs? How do you feel from your vantage point? You still work with a number of different institutional clients, or you sit on the board, and in your past life as well with Texas ERS. How do you think about the value proposition of adding value to small businesses, real people, the real economy, and a lot of these businesses that are never going to be multi-billion-dollar businesses, but a lot of them that are essential service-oriented companies? How do you think about that from when you say a partnership and our partnership to the real economy in the U.S. as an investor?
I think it's tremendous. I've seen stats, and there's a variety of statistics out there that space is over 200,000, and that it can represent as much as 50% of U.S. GDP. That's crucial, and for public funds, it's even more so, to the extent that, and just a story from the past, whenever we would testify before the Senate Finance Committee, they would ask us, well, what percent of your trust is in Texas companies? We always had an answer. And
adding value locally. Right?
Absolutely. These are my constituents, on both sides. So what and how are you doing that? And that was not just a soundbite, but it was a good factoid to have in place. And I guess it gets to the point that the area for lower middle market is really the backbone of U.S. GDP. And we don't have to worry about so much the political environment of the day. We don't have to worry so much about what's the central bank going to do. And it's a dynamic that's changing as well from when the 20 plus years you've been involved, as well as my period in the investment business. In the past, everybody would go to the banks and get capital. Now, the banks, thanks to Silicon Valley Bank, thanks to Dodd-Frank and the Volcker Rule, it's much more constraining. They don't have the flexibility. In fact, with the real estate debacle going on, as we see it today, more money, and the private equity side, more money is going back and being assets turned back to the bank, given the creditor relationship. So in the past, the lower middle market companies could go to the banks. Today, I think that dynamic's changing. And one of my involvements also is with FINRA. And I can almost guarantee we're going to see more regulation on the banking side, which will make things more complicated as we go forward.
Yeah, it makes sense. And then the world has changed a lot. And when you think about the banking system, the deposits have really left a lot of the smaller banks and gone to the larger banks. And so it's really almost two different currents going on, where the large banks generally are actually quite well capitalized and have a lot of money for the bigger companies, but the smaller banks don't. Yeah. And so it's really, when you read the headlines, it's not one marketplace. There's really two different marketplaces. And right now they're almost inverted.
Absolutely. Very true.
That's helpful. Well, Tom Tull, thank you very much.
My pleasure.
I like the quote from you of watch the herd, but don't necessarily follow the herd to observe what it's doing.
Yeah. Patience pays.
Yeah, there we
Very
go.
good. Okay.
Thanks, Tom.
Thanks very much.